Yeah, I mean,
And
I think that there will most. I mean, look, let's play devil's advocate for a second. And the answer to your question in a nutshell is I'm very optimistic, and even more optimistic about the future of this country than I've been in the last 4 years, for sure. I think if we play devil's advocate, and there is a deep state that he's challenging, the best way to derail, and to your point, derail this administration, and then guarantee a return to the lunacy would be to blow up the system economically, to pull the rug. And, it's interesting when you think about the consolidation, right? The consolidation of the majority of the wealth in this country is in just a few places. You got 7 to 8 trillion in money markets. You have a massive amount in equities that are concentrated into a handful of stocks, and you have this new Bitcoin and crypto craze. That it's interesting too when you talk about the crypto craze. You think about how things maybe aren't as we all understand. Maybe they are, maybe they aren't. But you look at Tether and you look at USDC, USDT, and USDC. These are the dollar-based stable coins. There are a few others, but these are the primary ones. And the primary Bitcoin, what is it? It's a complement. It is a pairing, if you will,
mhm.
is Bitcoin USDT. So someone sells their Bitcoin, they go to USDT typically instead of going into US dollars, and it keeps them inside the ecosystem. Well, same thing is true with USDC, which is run by, I think, Goldman Sachs. But if you look at their balance sheets, they're 85% US Treasuries. So by trying to leave the system, as most people are, they're in fact supporting the legacy system by, as the rest of the world is selling US Treasuries, because there is a dollar shortage going on. As crazy as that sounds, there is a global dollar shortage. All of the money that was printed over the last several years, the commercial banks haven't wanted to lend it out into this economy, so they give it back to the Fed, held in a reserve account, making 5%. And so the banks are getting wealthier. They're not risking it, but all of that money never got out, creating massive inflation. Maybe it will at some point. The banks, when they sell the bonds to the Treasury, can use that money in two ways. They can lend it out, or they can give it back to the Fed where it's held in a reserve account. They lend it out in credit cards and mortgages and car loans, and that creates money and creates velocity, but holding it back into and inflation, but holding it back into the Federal Reserve just keeps it kind of locked up. And so you do see countries that are either selling US Treasuries to fund their failing banks because they need the dollars, or selling treasuries because they understand not only have they been very volatile over the last couple of years, but they can be weaponized and inflated. So you have default risk, sanction risk, inflation risk, all of these risks that were never associated with the treasuries now are. And so it's interesting when you see these countries selling treasuries that USDT and USDC are in some ways supporting the legacy system, supporting the debt market.
Throughout history, crises, particularly those involving currency debasement, have always been the great accelerators of monetary change. If there's one word that sums up where we stand, it's inflation. Now, inflation in itself isn't always bad. A modest 2% inflation target, for example, is often considered a sign of healthy economic growth by central bankers. But when you have massive expansions of credit, as we've seen recently, the risk that inflation morphs into something more severe looms larger. Scholars ranging from Nobel laureate Milton Friedman to Austrian economist Ludwig von Mises have repeatedly warned that inflation, once out of the bottle, is very challenging to contain. One might ask, but Andy, if our country is printing trillions, how come we haven't seen the type of hyperinflation some gloom and doom pundits have been predicting for years? An interesting twist is that much of the money created finds its way back into banks' reserve accounts at the Federal Reserve, as these banks earn interest risk-free. Instead of pumping that money into the real economy via loans and credit creation, banks essentially keep it parked. That locked-up liquidity is part of why the velocity of money, how quickly each dollar changes hands, has remained relatively low. But folks, this is like standing at the top of a hill with a snowball in your hand. It's stable right now, but the moment you set it rolling, it can quickly gather momentum and become unstoppable. If banks decide, either because of regulatory changes, policy incentives, or a shift in credit demand, to start loaning out that cash en masse, you would see a significant jump in monetary velocity, driving up inflation. That's the risk scenario we're all trying to navigate. So where does gold and silver come into this picture? Gold has been the bedrock of monetary stability since the dawn of recorded financial history. Empires have risen and fallen, currencies have come and gone, but gold and silver have remained revered forms of value. Even as the US dollar enjoys its status as the world's reserve currency, the cracks in that foundation are showing. Various central banks, most notably China's and Russia's, have been boosting their gold reserves in the past decade at a pace that dwarfs much of their prior buying. Official data can sometimes obscure the true scale, but anecdotal reports and import stats show massive accumulation. Additionally, we're seeing new impetus from major players like the BRICS nations, Brazil, Russia, India, China, South Africa. These nations are collaborating, whether explicitly or behind the scenes, on alternative payment and settlement mechanisms. That doesn't mean the US dollar goes away tomorrow. James Rickards correctly points out that a fully functional common BRICS currency is likely still far off, but there's a distinct push away from total dependence on the dollar. Gold is often the stepping stone in this evolution. When you read about de-dollarization, a key strategy is to settle international trade in national currencies, or even to revert to gold as the final settlement asset. It's not instantaneous, but the train has left the station. But let's talk specifics. Where do gold and silver fit in your portfolio? Traditional financial planners used to suggest holding maybe 5 to 10% of your net worth in precious metals as a hedge. But with the unprecedented money creation of recent years and the mounting global uncertainty, many investors now consider 15 to 25% precious metals allocations. This is not a casual suggestion to be made lightly, because asset allocation is unique to each individual's risk tolerance, investment horizon, and overall financial goals. However, the underlying logic is that gold and silver are not someone else's liability. They do not depend on complex counterparty relationships or trust in a central bank's promise. The US remains a great country, brimming with innovation and grit. I'm optimistic about the future, especially if we can fix certain systemic issues. But you don't want to bet your entire life savings on the notion that inflation can remain suppressed forever, or that global faith in the US dollar remains unchallenged. Owning gold and silver is akin to taking out an insurance policy on your wealth, but with the added benefit that precious metals historically appreciate in times of fiscal and monetary stress.
But to your question, am I optimistic? Yeah, I am optimistic. I'm optimistic and I'm hopeful. I hope they don't pull the rug on them, because you talk about a bank collapse or a market collapse. You pull the rug and you have such concentrated forms of wealth in three areas. It wouldn't be as difficult as one might think to really create a very big problem. And if that's what the deep state's agenda was to do, Trump and his agenda would be blamed for it. And that would be, I think the easiest way to derail that administration. But you're right. Hopefully we have 12 years ahead of us of a Republican-led regime that has now become kind of the Democrats of old, where it's the working folk, it's middle America, and the left has gone so far left that I think it's really started to freak some people out. Even people, I don't know if you watch Stephen A. Smith, he's on ESPN a lot. He just went into a massive rant about the Democrats, and you guys blew it. No one wants to listen to you anymore, get lost, so to speak. So I think even the people on the left. And so my point is simply this, is that you can be socially liberal and fiscally conservative, and yet a guy like me would be painted into the right-wing nut job theory or class. People don't take the time to understand who we really are, and you're either way right-wing or you're left, or chauvinist, or whatever it is, for having that view. That's got to go. And we got to go back to where we were. And that's a good place to start. And that's what I'm praying that this administration does. But in terms of hopefulness, yes, I am. But there is no way, as what's his name, the father of Austrian economics, Ludwig von Mises, said, there is no way of avoiding the final collapse of a massive expansion in credit. Now, I didn't say it the way he did, but he basically says, if you have a massive expansion of credit, it will be followed by a massive contraction. In other words, a boom and a bust. And that's coming. We have to do that. And when you add all the debt into it, and we're trapped with interest rates, you raise interest rates high enough, you blow up the system, you blow up the banks. You can't really go there. So you look at the rest of the world, if I were the rest of the world, and they're saying you have to take dollars or else, well, really? So you can weaponize it, you can inflate it, you can have a massive, ever-increasing debt of fiscal irresponsibility. You can go around the world imposing your will and taking over countries under false pretenses to exploit them. But I have to take your currency. This is going to create some problems as well. It's going to incentivize and crystallize the resolve of the BRICS to continue to build their alternate settlement system. It doesn't mean it's a common BRICS currency. And I agree with James Rickards. That's 10 years away, but not right now. I mean, they have a common settlement system. It's gold. And as James Rickards said the other day, if he was Powell, he would just front run the BRICS nations and buy gold massively. And maybe they will. But I don't think this is anything to be worried about if you own gold and silver. In fact, I think it will be a very bright 4 years for people who hold gold and silver because inflation is here. It's not going away. It's only going to get worse. And Trump's policies of a weak dollar, of low interest rates, that's a massive loss of purchasing power.
As James Rickards said the other day, if he was Powell, he would just front run the BRICS nations and buy gold massively. And maybe they will. But I don't think this is anything to be worried about if you own gold and silver. In fact, I think it will be a very bright 4 years for people who hold gold and silver because inflation is here. It's not going away, and it's only going to get worse. Trump's policies of a weak dollar and low interest rates will ensure that purchasing power continues to erode. Let's take a step back and ask a simple question. Why gold and silver? Why have they been the go-to safe havens for thousands of years, regardless of political cycles, war, or economic turmoil? It's because gold and silver are not promises. They are the opposite of fiat currency. They are real money, tangible assets that don't rely on governments or financial systems to retain their value. When the dust settles and fiat currencies get devalued, gold and silver are still standing. In times of uncertainty, gold becomes the anchor for central banks and investors alike. Over the last decade, we've witnessed a massive accumulation of gold by central banks, particularly in Russia, China, and the BRICS nations. Why? Because these countries see what's happening. They're preparing for a monetary reset, a move away from a global dollar standard. China, for instance, is the largest gold producer in the world, and yet it is a net importer of gold. That doesn't add up unless you look at the bigger picture. China's gold strategy is about far more than just hedging its reserves. It's about positioning itself for a post-dollar world. China buys d'Or bars and concentrates directly from miners, often paying a premium. They are systematically siphoning gold out of the market and refining it domestically. Alasdair Macleod estimates that China holds over 38,000 metric tons of gold, far more than the paltry 8,300 metric tons claimed by the United States. If that figure is anywhere close to being accurate, then China is sitting on the most significant gold hoard in human history. And here's the kicker. The gold held by the United States hasn't been audited since 1953. Think about that. Nearly 70 years of no transparency, no verification, and no accountability. If we're sitting on gold that has been leased out, hypothecated, or otherwise leveraged to manipulate the markets, then the reality could be much darker than most Americans realize. Gold is the Achilles heel of the fiat system. Silver, meanwhile, is the most undervalued and misunderstood metal on the planet. Many people still think of silver as poor man's gold, but it's far more than that. Silver is both a monetary metal and a critical industrial metal. Its use in green technologies, electric vehicles, 5G networks, and military applications makes it indispensable. As we shift toward renewable energy and digitalization, demand for silver will only increase. Let me give you an example. A Tomahawk cruise missile requires about 500 ounces of silver in its cone. That's just one missile. Now multiply that by thousands of missiles, drones, and other high-tech military equipment. Where does all this silver come from? The military-industrial complex doesn't advertise its consumption of silver, but the evidence is there. During World War II, the U.S. government requisitioned billions of ounces of silver to meet wartime demands. Fast forward to today, and the supply-demand imbalance is worsening. The Silver Institute has reported a structural deficit in silver for the last 4 consecutive years. Demand is outstripping mine supply by hundreds of millions of ounces annually. Where is this extra silver coming from? It's being drained from above-ground stockpiles, the London Bullion Market Association, LBMA, and exchanges like COMEX. This is not sustainable. And here's where things get interesting. 8 Western commercial banks hold the largest concentrated short position in silver of any commodity traded on the COMEX. Why would they suppress silver? Because silver is strategic. Its price must remain suppressed to maintain the illusion of dollar stability. But this suppression cannot last forever. As the BRICS nations and others continue to accumulate silver, the fundamentals will override manipulation. The BRICS nations, Brazil, Russia, India, China, and South Africa, are at the forefront of this global monetary shift. They are actively working on a trade settlement system backed by gold. According to Dilma Rousseff, the former president of Brazil and current head of the BRICS New Development Bank, 40% of this system's value will be pegged to gold. That's a massive endorsement for gold's future role in global finance. Here's a thought experiment. What happens if the BRICS nations announce a gold-backed trade currency tomorrow? The price of gold will skyrocket overnight. And what happens to the value of the US dollar? It will plummet because the dollar's value is predicated on trust. Trust that is eroding with every passing day. James Rickards is right when he says the US could front-run the BRICS by buying gold massively. If the Federal Reserve or Treasury were smart, they would shore up our gold reserves before it's too late. But instead, we see nothing but denial and manipulation. Let's not forget that inflation is the silent tax on all of us. The Federal Reserve claims that inflation is under control, but anyone who shops for groceries, fills up their car, or pays rent knows otherwise. Real inflation is far higher than the numbers reported by the Bureau of Labor Statistics. And here's the thing, inflation is baked into the cake. Trump's policies of a weak dollar and low interest rates will exacerbate inflation, no question. But that's not necessarily bad news for gold and silver holders. Inflation erodes the value of fiat currencies, but gold and silver retain their purchasing power. Historically, in periods of high inflation, gold and silver have been the ultimate hedges. If the 1970s taught us anything, it's that gold and silver thrive in inflationary environments. I know Bitcoin is the shiny new toy on the block, and I'm not here to bash it. Bitcoin has a role to play, especially as a speculative asset and an alternative to fiat currencies. But it is not gold. Bitcoin is volatile, too volatile to serve as the foundation for a monetary system. Gold, on the other hand, has stood the test of time. It has been money for 5,000 years. Bitcoin is 15 years old. Let's see where it is in 50 years. Moreover, Bitcoin and other cryptocurrencies are not immune to manipulation. We've seen this with Tether and other stablecoins. These so-called alternatives still rely on the dollar system, as their reserves are often held in US treasuries. So while Bitcoin may rally alongside gold in the short term, it is not a replacement for gold. To wrap this up, I am more optimistic than ever about gold and silver. Inflation, fiscal irresponsibility, and geopolitical shifts are all converging to create the perfect storm for precious metals. If you own gold and silver, you're positioned not just to survive, but to thrive in the years ahead. The writing is on the wall. The BRICS nations are accumulating, central banks are buying, and the fiat system is cracking. We are witnessing the beginning of a new monetary era, and gold and silver will play starring roles. As the great Ludwig von Mises once said, there is no means of avoiding the final collapse of a boom brought about by credit expansion. That collapse is coming. The question is, are you ready? Gold and silver are not just investments, they are insurance. They are the antidote to fiat insanity. As Rickards, Mises, and others have taught us, those who prepare will come out ahead. Those who don't will be left holding the bag. The choice is yours, but time is running out.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.